All right, so we are going to get started with Chapter 3. In Chapter 3, we're going to really dig into modified accrual accounting. And so when we talk about modified accrual accounting, of course, we're talking about those governmental category type funds, right? So when you're dealing with government funds, you're going to be dealing primarily with like the budget. The budget is so important, and that's part of what we're going to do in this chapter as well. So Chapter 3 really is one of the most important chapters that we're going to cover this semester. We'll also begin working on some journal entries in this chapter for both financial activities, so some of those non-exchange transactions we talk about, as well as for budgetary journal entries, which are going to be extremely important. Budgetary journal entries are going to be a new concept for you guys. But recording and maintaining the budget in an accounting system for the government, for a governmental entity, is so important. It helps to ensure that they're not overspending money and that the money that they say they're spending on something is being spent on that something, right? So it's just a way of holding them accountable. It's a way of ensuring that these monies are spent the way they're supposed to be spent and that they're not overspending. Remember, budgets for the government are legally binding. So let's talk about kind of the learning objectives just very briefly here. We're gonna talk about the basic accounts that we use in the governmental funds. So these will be both financial and budgetary accounts, both permanent, which, if you'll recall, means that they do not close at the end of the period or the end of the year. And we will also talk about temporary or nominal accounts, which, if you recall again, are closed at the end of the period or the end of the year. We'll also discuss more in depth about modified accrual basis. We're going to apply fund balance classifications for governmental funds and prepare journal entries for the expenditure cycle. We'll do this for both budgetary and activity type accounts. So, as a reminder, for-profit businesses use the accrual accounting, the accrual basis of accounting. So when they recognize revenue when it's earned, right? So to earn revenue for a for-profit business typically means that you have sold, you've shipped something, you've delivered something, you've provided a service to a customer. And once you've done that thing, once you've met your end of the bargain, you have earned your revenue, right? So once you earn it, you can recognize it. That's why we have those two accounts in our for-profit classes. You know, you've got revenue and unearned revenue, right? Unearned being a liability. You don't get to recognize until you've earned that revenue. So if you think about it, the basis for recognizing revenue under the accrual basis of accounting is that an exchange takes place, that the customer's received something or you have provided a service for them, right? Well, in governmental accounting, for governmental organizations, governmental entities, much of the revenue source, if you'll recall, comes from taxes, so levied taxes, property taxes, could be outside of taxes. It could be something like getting a speeding ticket or a parking ticket or something like that, right? So think about those. No exchange has actually taken place. You've gotten nothing. I mean, you think about it. If you get pulled over by a police officer and you get a ticket, all you've gotten is a bill. Have you gotten anything that you can use? I mean, you've learned a lesson, hopefully, to not speed anymore. But outside of that, you haven't really gotten anything. That's a non-exchange transaction, and that is why we use the modified basis of accounting. Helps us determine when to recognize revenue when there's not an underlying exchange that takes place. Right? We haven't earned it. We haven't done anything to earn that revenue. So when do we get to recognize it? So, modified accrual accounting is a distinct system of accounting that contains financial statement elements that appear nowhere else. So, a couple of these, some of these specific characteristics are going to be expenditures, what we call expenditures. Think of them kind of like an expense, and fund balances. Fund balances you can kind of think of as like the equity section of your balance sheet. So, modified accrual accounting, the revenues do appear in financial statements of both accrual and modified accrual. We follow different recognition criteria for the two bases, though, right? So there are no expenses in modified accrual funds, and we'll talk about why here in a little bit. So, modified accrual basis of accounting. This is just another review. You guys should know this kind of by now. This is kind of a review of what we talked about in chapter 1 and 2. So, the modified accrual basis of accounting is only used by governmental type funds. So, remember, we have the 3 fund categories: governmental, fiduciary, and proprietary, right? So only the fund types that go in the governmental category are going to use modified accrual basis of accounting. The other 2 fund categories, fiduciary and proprietary, both use full accrual accounting. So within the governmental type funds, you'll remember that typically the revenues are going to be taxes or other types of sources of revenue, like parking at the airport, or parking downtown, or a tax imposed on goods that you purchase downtown. Those don't actually involve any exchange. They're simply a non-exchange transaction. So how we recognize that, the revenue recognition criteria for a modified accrual basis of accounting is going to be that the revenue must be measurable and it must be available. Write that down. Take note of that. I am sure this is in your notes that you should be completing as you follow along and as you read your textbook and all that good stuff. So just remember, revenue recognition criteria for modified accrual basis of accounting is that it's measurable and it's available. Measurable simply means that we can measure it. It has a known value. We know that we're going to get $5 million in property tax revenue in our city, right? So we know that. Available just simply means that it will be collected within the current year or soon enough after the year ends that we can still pay current obligations. So in terms of this class, that's going to be 60 days. So collected during the current year or within 60 days of the year end. Measurement focus. Recall we've got 2 of these. The one that we use here in the modified accrual accounting for the governmental category funds is going to be the current financial resources measurement focus. This focuses on current, no long-term. Okay, there are no long-term liabilities. There are no long-term assets. These are simply the current resources that you have at your disposal. So there's a box down here with a note saying modified accrual basis of accounting uses the current financial resources measurement focus. Remember that. Please, please, please remember that. Write this down in your notes, okay? I would imagine that there will be quiz and exam questions about this. So the second one that we have is economic resource measurement, and that is what we use in full accrual accounting. That uses all of your resources. So when you see E for economic resource measurement focus, think everything. It's going to use all of your resources, current and long-term, right? So that is the difference between those 2. So modified accrual basis of accounting, again, is only concerned with current resources, the resources that are current. So no long-term, no capital assets, nothing like that. So you'll notice here we have a list of permanent balance sheet accounts not closed at year end. So remember all the way back to your Accounting 201 class when you were talking about closing your statements at the end of the month, closing accounts at the end of the period, whatever the case was. We know now, or you learned back then that you close your revenues, your expenses, and your dividends. None of that's on your balance sheet. So these are all obviously going to be permanent accounts. If you take a look here, we see our assets and liabilities listed. You'll notice there are no long-term assets, no long-term liabilities listed or displayed for the modified accrual basis of accounting. This is going to be your governmental category type funds only, right? No long-term assets, no long-term liabilities, okay? This is going to be a great resource for you to use, so make sure you're filling out the tables in your notes accordingly. Also, let's just take a quick look, just some quick examples of what we should include and what we should exclude when we are using the modified accrual basis of accounting. Again, that uses the current financial resources measurement focus, meaning it only uses current assets, current liabilities, right? So for assets, we would want to include all of our current assets. That's going to be things that you're familiar with, cashes, your taxes receivable. Since we're a government entity, we don't receive all of the cash for the taxes we levy all at once. We're going to have some outstanding. They become a receivable. Accounts receivable, we will also include. We will exclude any type of long-term asset that includes capital assets, right? For liabilities, we're going to do the same thing. We're going to include current liabilities, so accounts payable, short-term accrued liabilities, and we're going to exclude any long-term liabilities, so things like bonds payable.